The markets are once again proving themselves to be more unpredictable than a Wi-Fi connection before an important Zoom meeting. With the US shutdown deadline looming, the Bank of Japan sending mixed signals, and oil traders, while struggling to balance headlines and supply data, today's landscape is anything but straightforward. So before you place your next trade, watch this. Good morning. Francois here, your market analyst here at ATFX Africa, and welcome to your daily market brief where I break down the fundamentals, the technicals, and will sprinkle a little bit of wit just to keep things a little bit lively. Let's kick things off today with USDJPY, aka the Ninja. Fundamentally, the yen story is like a soap opera, full of drama, suspense, and mixed signals. Why? Well, the Bank of Japan released its September meeting summary, and in it showed some policymakers want more hikes, others want to keep rates low, and at least one member basically just said, well, let's just wait and see. Meanwhile, Japan's retail sales slipped 1.1% in August, its first drop since February 2022, and industrial output also disappointed. Add in US shutdown jitters and the Fed uncertainty, and well, you've got yourself a currency pair stuck in the middle of a tug of war. On the technical side, USD/JPY is hovering around 0.5, down slightly on the day. The pair has been on a broader weakening trend over the past month, about 0.97% lower. With global trade policies and Fed moves in the mix, the level could act as a seesaw. So, watch if it dips towards 147.5, which is the support level, or whether it will claw its way back to that 149.1 resistance level. Either way, expect some volatility ahead of the US NFP report later this week. Well, that's if we even get an NFP report this week. Heading over to commodities, oil traders had a rough Monday. And I'm sorry guys, but Tuesday isn't looking much better. WTI crude slipped towards $63 a barrel, extending losses as the market digested news of more supply coming online. OPEC Plus is expected to approve 137,000 barrels per day output hike for November. And Iraq's Kazakhstan region has also resumed exports via Turkey. That's like throwing extra ice into an already overflowing glass. Oversupply concerns are clearly everywhere. On top of that, there's geopolitical theater. Trump and Netanyahu have announced a peace framework for Gaza. But Trump also said Israel has a green light to, well, finish the job if Hamas rejects it. Meanwhile, the EU reinstated sanctions on Iran. So yes, plenty of headlines for oil traders to all juggle a little bit. Technically, WTI is trading on that $62.90 support level. And if that cracks, we could start staring at a further decline towards $61.40 a barrel. Resistance is up around $65.50, with prices down about 2.4% this month and nearly 10% lower year on year. Well, oil looks like it's stuck in a bearish gear unless demand starts to show some signs of life really soon. Now, onto US equities, where the S&P 500 is doing its best to shrug off Washington drama. The index sits near 6,657, just shy of its record highs. Now, yesterday, AI and tech stocks led the charge. Nvidia is up 2.1% and AMD is up 1.2%. And on top of that, Micron is up 4.2%. It's like the AI sector showed up to the party with energy drinks, while everyone else was, well, running out of steam a little bit. Fundamentally, though, the looming government shutdown still hangs over the market like a massive storm cloud. If a deal isn't struck by midnight tomorrow, And yes, I know it kind of sounds like a Cinderella story, but we could see economic data release delayed. Yes, and that includes Friday's all-important jobs report. That's like trying to drive your GPS, well, turned off. The Fed won't have a clear map for its next move. Technically, support sits around 6,620, while resistance is up near the 6,700 zone, which is that all-time high region. For now, momentum favors the bulls. But one political hiccup could send markets into a risk-off mode. So what should we watch for tomorrow? Simple. The US shutdown countdown hits 0. And if Congress doesn't act, markets could throw a tantrum worthy of a toddler who was denied candy. I'll break it all down for you in tomorrow's brief, so stay tuned. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.